So friends, I greet you all, Magdan is with you. Today we will talk about the topic of the correct rollback, how you can determine the correct rollback on the market, what it is and how to use it in your favor to practice very high profile, high quality positions. I think you have been watching different tutorial videos on YouTube for a very long time, but nothing helps you. So I assure you this will be the last of your videos from this series of failures. And finally, today you will understand how you can really read the market well and work out very cool positions. So please watch this video to the end and we begin. First, let's talk about the topic of the correct rollback. What is it? Today I will not touch on the very essence of how to determine it by switches. Today we will touch on such a part based on the logic of how it is formed. We have a downward movement. Let's imagine that there is a downward trend, then there is an impulse, then there is a correction and a new impulse. What will people do in this case? Based on different tutorial videos on YouTube, everyone is trading the swing structure of smart money. This is a structure that forms maximums and minimums. And how can traders trade it? They think that they will sell from blocks at extra ohms, and after the break of this swing, they will think that the structure has broken and will begin to buy from blocks. In general, this approach is not bad, but it has a very big drawback. The price always breaks through these points of oscillation, that is, these maximums, and goes in a different direction. I think you have already often encountered such a situation that you seem to have found a good setup, saw a break, go into some imbalance, set your position, put a stop loss for a minimum, and take profit. But the price gives some kind of correction, does not even update this high and goes further down, or for example, it still goes higher and higher, but it touches some kind of resistance zone here and goes down. Why does this happen? Because you do not know how to use the correct logic of the impulse, that is the inducement. Now I will explain everything to you. Let's start with the correct approach. People with this logic open their positions and, for example, when the price gives a correction up, they will go into the sale from blocks without removing some liquidity or stimulus. That is, they open a short here, put a stop loss here or here, but in general it does not matter, we will have such a stop loss zone, that is a liquidity zone, where all the traders' stops are set. They set, for example, a take profit, then the price, or rather, let's put it a little lower, for example, they put it on some liquidity, let's imagine it like this, that is, they put a take profit, the price starts to go down, updates this minimum, but then it goes up like this. What does it do? It removes this high. In this case, most traders see such a template for the photo, that is, it will be a break in the structure for them, again, a break in this swing. For example, if they are not even knocked out by the stop loss, they will be closed, because this is how psychology works. Everything is tied not even to the strategy, but to human psychology. We have a separate topic. When we trade online, I very often touch on this point with the involvement and bites from the price, when the price involves people in some wrong direction and then goes in the other direction. As a rule, this involvement will be super impulsive, so that a person believes that the price really wants to go higher, for example, here. They see this slow. As a rule, it happens very impulsively. Even if it is sluggish, people still go in, because they have faith that the price will go higher. The most interesting thing starts here. When the price removes this high, people start to go shopping. When they go shopping for some kind of correction, the price starts to be corrected. For example, if we have some kind of block here, or imbalance, let's mark it, they go into the long like this. They put the stop either here or as they like for this low, and somewhere they take profit. Then the price makes a small correction, and then it falls down again. And that's how the market just bent you because you first sold here, closed the deal voluntarily, or the market closed you on the stop. And you also did not guess the second position, the price closed you on the stop again. You ask yourself what to do. Something like this. Everything seems to be done correctly, the correct setup, as taught on YouTube in different training, but still the price does not work out. What to do? This problem is solved by one factor, we call it inducement. This is the stimulus of the market, which also works on these symbolic factors. When the price, for example, is removed, it is always the first maximum of the internal structure. We have a structure, we have a minimum, maximum, minimum, maximum, minimum, and here is our lowest low. The first correction is here. Accordingly, this will be our inducement. Let's mark it like this. This is our inducement. That is our stimulus that encourages people to buy or sell. In this case, they encourage people to buy. Also, a very important difference in our smart money strategy from classic smart money is that we know where the structure goes, in what direction. We understand how the true points of oscillation are formed, that is, minimums, maximums, and how the boss choch are formed. Now we will go further. After the removal of the inducement, when the price encourages people to buy, for example, the price only now confirms the true minimum. That is, here is the lowest point. That is, this is a confirmed point of oscillation. That is not this, not this. These are just internal minimums that are not confirmed in any way because no inducement has been removed here. The price is removed, and what does it do next? It goes down, of course, because of all the stop losses of traders who bought here. And at this point, when the price updates this minimum, the boss, chosh, and the structure continue the trend of the declining price. And only after this boss, you have confirmed the upper point. Now you have your points of oscillation, that is, the minimum, maximum. What will happen next? Of course, go to your target. For example, she has some kind of goal based on the old time frame. Let's imagine that, for example, liquidity is here, and she will strive for it. That is, this is her main target. And listen carefully. As the price moves to its main target, it will always try to get you out of position in any way. From the short position to the long position, it will try to distract you. That is, your main task is to correctly define the context, create a good narrative, and use the rules that I will now talk about. That is from our strategy. You must understand that she will distract you in any psychological way. This is called a buyout. That is, a buy from the price when she gives false impulses. For example, a very strong superimpulsive candle. You immediately have such pressure inside. You want to buy, and of course you will open a long position. You need to adjust, give a reaction, and then fall again. And what does she shoot at this moment? Pay attention. That is, she adjusts herself superimpulsively. And the price removed the first buyout. That is the inducement. You see, this is the first internal maximum. That is not confirmed. And because it's just a correction. The main point of oscillation, the main maximum, is here. Because it is confirmed using inducement. Here. The price removes the inducement. Here again, yes. Let's mark it here. Like this. And what happens at this moment? Again, you have a new minimum confirmed. Here. Now you have a range in which you can trade. You have this maximum confirmed. And this one is also a confirmed minimum. You have an inducement, and in our strategy, only a few zones of interest are used. Several order blocks. Here is the next video on this channel which will be released. There are order blocks, more in-depth structure. Therefore, be sure to subscribe to the channel on YouTube so as not to miss new videos. Here. And we have only a few zones. How many people have already filmed on YouTube in the usual video? There are order blocks. Throw zones of buyout. All the time there was one problem. How to determine a really good working buyout. And which of them will really work? Okay, you can technically determine it correctly. But there can be at least 10 of them. And which one to enter? Tell me which one to enter. It is not clear from which one. But again, the rules of our strategy make it very easy. Because again, we have only 2 effective zones after such inducements. Because before removing XM, we do nothing. We just wait. Because there will be some reactions. But it will be SMT. SMT is a trap. That is, there will be SMT blocks, which will give a small reaction to involve people in the sale, but the price will go higher. Only after removing the inducement, you will have the first block. After removing the inducement, immediately the first correction. You see the first cutback. Here it is. After the inducement. Here will be a block. Imagine, yes, here is such a zone, and from it you can already open a short position. With a stop loss, for example for a high, or for a block, and a target for updating this minimum, or for the main goal, here, and the price of course will move. In this way, do the same boss, and confirm the new maximum. So